Hi, I'm Tammy Murphy, broker owner of RH2L, bringing you a little bit more of in-depth what does it take and how do I know how much I can afford for a mortgage payment. So if you are considering looking at buying a home in the current market in which we have higher interest rates, higher prices, and you're just trying to figure out, well, how do I know if I could actually do this before I go through the effort of calling a realtor or talking with a lender? Is there a way that I can figure this out for myself? And so this is kind of one of those extra steps in our help series that allows for you to gain a better understanding of what your true position is. So this is talking about how you can actually qualify yourself. And I always tell people, just because a lender would qualify you for a large purchase on a home at a dollar amount doesn't mean it is what you are going to be comfortable with or want to actually do. So if they give you a pre-qualification for a $600,000 home, but you really don't want to buy at a $600,000 level, then you are obviously able to scale that back and say, nope, this is more my budget. I really want to be in about a 400,000 price point. If you're just getting started out, you're probably talking about a beginning step somewhere between 175 to 250 as a beginning purchase price. And of course, we want to find the best deal for you. But again, what are some of the things that you can work through to see how it works for pre-qualifying yourself? And so we can do some general questions to you, as would a lender, and it's just talking about some of those details. So first of all, I start with, how much do you think you're comfortable in paying? If you tell me, look, I really only want to be at $500 a month, we're going to have a very quick conversation because the market just really doesn't have purchase price in that price range for a monthly payment right now. And so it really doesn't go any further than that. But if you say, hey, I could be maybe in $1,000 to $1,500 a month, what are my options and what do I need to do? So that would be the starting point. The other thing that I would say is, if you are employed and you have income, then you can do quick, easy math to say, what would I potentially qualify for? And I like to use a number that is going to give you more affordability, more freedom in having the ability to pay more if you want, or to not be stressed and struggling on a month-to-month basis, living paycheck to paycheck, as many people are. And so I will go with a lower figure, and I'm going to tell you, if you use 25% of your annual earnings as an amount to see, is this an option for me to buy a house? And if that number comes up within a range that fits for what our market is actually showing available, then that would be the next step for us to have a deeper conversation. But if it's, again, if you are making $31,000 a year, that is going to equate at a 25% ratio, just under $8,700 for the year, which means that it's going to be tough, not impossible, but tough to potentially find a mortgage payment that you can get in that range of about $725, $750. Of course, there are other variables that come into play with here, and that's why I use a number that's easy for you to do the math. So take your annual yearly amount, and if that's 50,000, let me put it in, times 25% equals 12,500 divided by 12 means that you have the ability potential for $1,041 for a monthly mortgage amount. And if that number is comfortable, then there you go. At 50,000, if you can be right in that $1,000 mortgage payment, then it's going to be an option for you. Now, the other factors that come into play is, what's your credit score? How much debt do you have? And when we're talking about debt, is there a car loan? Are there credit cards? These are the things that typically come into play, which is why a bank may qualify you from 25, 28, 35 to 40%, but that doesn't mean it's comfortable for you. I want to go on the lower amount so that I know if there is the need for an emergency or for lower income for whatever reason on a particular time, that you're not going to be cash poor and unable to make your payments. So if we factor at a 25% level, that is a very nice affordability factor for most people when buying a home. That means you have the resources to pay for your utilities, for eating your food, groceries, eating out, those types of things, as well as the credit cards or the car payments or other things that you might have coming up. And so that's important to know that you've got a little bit of a buffer. Can you pay more? Maybe, if that's comfortable for you. But again, it's better to have money in your pocket, and then when you have that cushion, you've built up your reserves, and you want to pay more to pay down your principal, then you're certainly able to do so. Now that brings us to the next factor that is a very big part of this. Not only is it the purchase price of the home and the current interest rates, but then we also have to factor in the property taxes and the insurance, because those all add to your mortgage payment on a consistent basis, and therefore it's important that you can cover those costs that are also included. So if the $1,041 is the mortgage payment, principal and interest, are you adding $100 a month for your insurance? And then what is your property taxes? Different communities, different size homes, values of the homes all come into play on what that property tax basis is. If you're adding another $125 because of the property taxes, that's a big difference from if you had to add $600 a month because of property taxes. And so that might also help you to decide if this worksheet and working through some basic numbers is something that you feel and find can actually work for you. So it gets into a lot of details that sound overwhelming, and we're not trying to give some math formula that takes a scholar to figure out. There are online calculators that are pretty nice to quickly, easily figure this out, but just quick general do the math in your head or pull the calculator out. Hey, our phones even have it on there, right? So you can actually do a quick assumption of if this, then that, and yes, that's within my budget. Okay, now it's worth having a phone call to a realtor who I can then build a relationship to work to my best interest to make sure that I can find a home in this price point that's going to match my budget needs. And then they can, or you may already have a lender who gets pulled into that conversation to confirm and actually do the qualifying with you. And that process then involves pulling your credit, which is that other factor that comes in. If you have a lower credit score, it's going to be a little bit tougher. The rates may be higher. And therefore, having that cushion allows for you to maybe still be able to make that happen. I hope that this next step in this conversation is helpful for you. And again, we're just trying to give you as much information as possible so you can make the best decision for yourself. Is it time to look at buying a home? Is it the right option for me? And does it fit for my budget and my comfort of income to debt ratios? Take care. If there's any questions, let me know. And I'm going to go ahead and drop a couple of these forms down below, just quick, easy math. And you can fill it out, figure it out, and if you have questions, I'm happy to help. Thanks so much. Bye-bye.